Denton, welcome. Good to have you with us. Can you take us
Thank you.
through some of the fundamentals of the oil and gasoline markets that you're watching that add up to the prices we're seeing?
Sure. Well, right now, refineries are in the United States are operating at a very high rate, but inventories are still very low. So right now we have the supply and demand imbalance, and it's really kind of been trending this way over the last several months, which really simply has gotten us to these levels that we are at 501 right now. 20 states and the District of Columbia being all averaging over $5. So it's been pretty ugly from a consumer standpoint.
And it's not as if another refinery is going to come online here in the next few weeks to bail us out. You've got Russian oil leaving the international markets, or at least partly so. As I understand it, you've also got a situation where refiners are incentivized by higher prices to concentrate on making other distillates besides gasoline, in other words, diesel and jet fuel, right? Because they have higher margins.
100% correct. And right now, your yields should be tilted more towards now you can't go 100% diesel and 0% gasoline. You could tweak it a little bit here and there, maybe a couple percentage points. But right now, the market is telling refiners, hey, we need more diesel. And quite frankly, I tend to agree with that because right now, diesel supplies, as tight as gasoline is, diesel's even tighter. It's pretty scary as far as diesel is concerned.
So what do you expect over the next, say, 3 to 6 months? We don't know, obviously, what the hurricane season might bring and whether it might impact or shut down some rigs or some refineries. We don't know whether demand destruction is going to take place. But what's your best guess on where we will sit toward the fall and winter?
Well, it's funny you mentioned hurricane season because it just started, and that's the last thing we need right now. But no matter whenever. But over the next several months, I think we are starting to see some of that demand destruction. Some of the data we get from retail stations throughout the country is starting to show a little bit of fading in gasoline and same store sales of gasoline. Mm-hmm. We're also hearing anecdotally, and this goes back about a month or two ago when premium gasoline reached $5 a gallon. Those drivers that strictly use premium, they were downgrading to regular. So if they're downgrading to regular at $5, I think we're going to start to see some behavioral changes here at $5 a gallon as well. So with that demand destruction, we might level off here. And again, yes, crude oil did move higher today, but gasoline futures have been dropping. They've dropped about 23 cents over the past couple of days. So we might see prices level off here, at least temporarily.
Interesting.
But again, July, August, all bets are off.
Well, that would be great news, at least in the near term, and then we'll see what happens, Denton. I guess, what should we watch for on the jet fuel and diesel aspects of this, which, as we mentioned earlier, are wreaking havoc on some of the airline stocks and other exposed parts of the market?
Well, Kelly, you're absolutely right. When it comes to diesel in particular, everything you buy in the grocery store, in the big box retailers, how does it get there? It gets there by a truck. Those costs are going to be passed on to the consumers, and at some point, the consumer's going to say, okay, enough's enough. I got to cut back on my buying, on my spending, et cetera. And then we're going to see that shock when it comes to airline tickets. If we want to go maybe to Europe. I mean, the dollar's really strong right now, so you've got a pretty good exchange rate, but that's going to get it beaten up by a plane ticket going to Europe or even Disney World, for example.